Wall Street reopens after a long weekend and ends largely lower as bond yields rise after commentary from the Fed suggests an easier monetary policy may come slower than anticipated. Asian markets mirror the cuts. The GIFT Nifty is indicating a gap down start for the Indian market. Crude remains largely range-bound with Brent around $78 a barrel, supported by tensions in West Asia, even as the dollar index strengthens. HDFC Bank reports a mixed quarter as the merger takes a toll on the performance. Profit beats estimates, but net interest income misses street projections. In key earnings today, watch out for numbers from Asian Paints and LTIMindtree. Top economists and global CEOs are upbeat on India at Davos. IMF's Geeta Gopinath says India is benefiting from the shift of production from China. Bank of America's Brian Moynihan says investments into India will continue as long as policies ensure returns, while Bill Gates believes that India can play a role in diffusing the tensions between the US and China. In more commentary from Davos, HCL Tech's CEO Vijay Kumar expects to end FY24 with industry-leading growth of over 5%. Tech Mahindra's new CEO Mohit Joshi lays out his plans to reshape the company and improve margins going forward. Good morning and welcome to Power Breakfast. Those are the top headlines. I'm Pavitra Parekh. There's a lot to talk about today, and today is actually going to be a lot about the domestic cues, largely about HDFC Bank and what it means for the rest of the banking pack as well. We'll talk more about that, but even as far as the global markets go, the handover has not been positive. For the US, after opening after that long weekend, the cues are a little bit not so good right now. So the Dow ended pretty with a sharp cut, and all of those are really being reflected in terms of what you're seeing in Asia. So you have pretty much all of the Asian markets barring just the Nikkei, which is in the green. So the Nikkei markets are up around 188 points, but barring that, everything is seeing a pretty big cut right now. So Hang Seng is down 1.8%. You have the Taiwanese markets, which are down not too much, but around 25 points there. Shanghai, Kospi, pull up any of the other Asian markets and you're seeing at least a 20-30 point cut to start things off. The GIFT Nifty will come up for you, and it is indicating that the start for our own markets is going to be sharply lower. 190 points lower is where we're at, but this is also largely because of HDFC Bank. It's not so much the global picture, but we'll talk more about that. That's what's happening in Asia. Let's also talk about the US now, because like I was mentioning, Wall Street ended Tuesday's trading session lower. So the Dow shed over 230 points. The S&P 500 slipped almost 0.4%, and the tech-heavy Nasdaq was down around 0.2% at the end of the trading session. Now, all three major indices ended lower because the 10-year US Treasury yield also gained around 12 basis points, and it's now back above that 4% mark. Why did this happen? Because the Federal Reserve Governor Christopher Waller indicated in a speech that the central bank may ease monetary policy slower than Wall Street had earlier anticipated. We have CNBC's Kate Rogers to get us a wrap of all of the action that played out on Wall Street. Kate.
U.S. markets were down across the major indices as Treasury yields ticked higher and investors took in the latest batch of fourth quarter earnings. The Dow was down 232 points, the S&P 500 lost 18, and the tech-heavy Nasdaq dropped 28. Lawmakers on Capitol Hill announced a new $70 billion tax deal today. The bipartisan agreement would expand the child care tax credit and add tax breaks for businesses through 2025. Republican House Ways and Means Chair Jason Smith and Democratic Senate Finance Chair Ron Wyden are hoping their deal will pass in the next couple of weeks so it can be applied for the upcoming tax season. But that could be tough to pull off as Congress juggles other priorities, including averting a government shutdown by the end of this week. And a federal judge today blocked the proposed JetBlue Spirit Airlines merger after the Department of Justice sued to stop it, alleging that the merger would drive up some fares for some of the most price-sensitive customers. The judge wrote in his decision that the deal would eliminate Spirit from the competition and hurt consumers who rely on Spirit's low fares. The $3.8 billion deal would have produced the fifth largest U.S. carrier. In a joint statement, the airlines wrote that they are reviewing the court's decision and are evaluating next steps as part of the legal process. That's what's happening here in the U.S. Back to you in Mumbai.
All right, that is the action from the US. Kate, thanks a lot for bringing all of that to us. But let's now talk about all of the cues that we should track from an India market standpoint and all of the stocks as well. We have our research team here with the trade setup. Ekta and Hormaz are both with me now to really help you out with that. Guys, good morning to both of you. Ekta, of course, we're all watching for what really happens with HDFC Bank, but take us through everything else that we should track.
Hi, thanks for that. Well, yes, absolutely. You know, we saw the little bit of chinks in the armor come through yesterday itself in terms of the markets, because the Nifty broke that 5-day winning streak that it had, and the advanced decline ratio was on the declining side. FIIs, however, continued to net buy, so they net bought for the second consecutive session, and DIIs net sold for the second consecutive session. So FIIs net bought around 656 odd crores, DIIs net sold around 369 odd crores. Now, in terms of the global setup, besides HDFC Bank, well, global setup is looking a bit tentative. So we had the US markets which closed lower, Asia which is weak ahead of the key China economic data, Brent crude which is little change, so around $77, $78 per barrel. So the global setup, as well as yesterday's trading session, is just indicative of maybe being a softer start for us, which is what the GIFT Nifty is indicating. Now, HDFC Bank, yes, first year-on-year EPS decline that we've seen in a decade for that particular bank, and hence there could be obviously trepidation on account of a disappointing quarter. Now, in terms of results today, that's going to be the key theme which will continue. So Asian Paints, Happiest Minds, ICICI Pru, LTI Mindtree, to name a few. And in terms of data from the US, we have the US retail sales, we have the 20-year bond auction as well. So a lot of data incoming, in terms of the US market session, which we'll react to tomorrow.
All right, Ekta, thanks a lot for laying out all of those cues. Let's also talk about all of the stocks that we should watch. Hormaz is here with that entire list, but Hormaz, quite the disappointment coming through on HDFC Bank.
Absolutely, and you can see that in the ADR, the way it moved overnight. It was down 7%. It was the biggest single-day drop that the US-listed shares had since April of 2022, so almost the biggest drop in 2 years. So you'll keep an eye out on that. L&T Tech also came out with results. The street was expecting a dollar revenue growth of 2.1%, came in at 0.9% sequentially, so a bit of a disappointment there as well. However, the bright side is that they've maintained their constant currency revenue growth guidance of 17.5% to 18.5%. Also reacting to results today will be ICICI Lombard, ICICI Securities, Credo Brands, TV18 Broadcast, a lot of them that came out post-market. We'll see a reaction in all of these names. Adani Energy Solutions, they shared their third quarter business update for the transmission and smart metering business, where they said that they have been awarded contracts for 2 million smart meters worth almost 2300 crore rupees. They received these contracts through the quarter. And Piramal Pharma will be in focus because they have launched a 10 milligram by 10 ml concentration of a zinc sulfate for an injection launched in the US markets. I will keep an eye out on that. Godrej Properties has acquired another 1 acre land in Yaswantpur in Bengaluru, and that land has development potential of 1.4 lakh square feet of saleable area. DCB Bank has received the Reserve Bank of India's approval for appointment of Praveen Achyutan Kutty as the new MD and CEO from the 29th of April. And lastly, both IREDA and Indian Overseas Bank will be in focus as they signed an MOU yesterday for co-lending on renewable energy projects. Back to you.
All right, Hormaz, thanks a lot for filling us in with all of that action in these individual names. Let's also talk about the cues from the futures and options space. Nigel is here with that. Nigel.
Well, morning, Pavitra. It's going to be a bit of a challenge, right? Who is the Nifty going to turn to? Because the IT index could be under some pressure. We had Wipro that was under pressure overnight. And LTTS as well was the disappointment in terms of earnings. While HDFC Bank will be the drag on the Nifty Bank. So we got a bit of an issue this morning. Let's see who can put their hand up and bat for the bulls. That said, yesterday there was some sanity that returned in terms of data points. Remember, the premium on the Nifty had moved up to 50-60 points as well at one point of time. Now that's more or less strategy. It's turned into a discount. So it appears some part of the market went short in yesterday's trading session. The FI positioning, though, they're pretty much unchanged, yesterday in comparison to the previous session. So they continue to remain long with close to 66 of their positions on the long side. The PCR, we pointed this out yesterday, that the PCR has moved to the upper end of the band. And sometimes when it moves to the upper end of the band, you do see some bit of a correction that happens. That happened, right, yesterday. But now, because of the kind of action we saw yesterday, the call writing that we saw, the PCR has come back down to around 1.2 in comparison to around 1.52 yesterday. So that's telling you that some sanity is returning even on that data point. Call writers, they were back in business. 22,100, 22,050 call. Both of them added close to around 65 lakh shares yesterday. So the bears believe they're in with a chance. They want to defend those higher levels, and that's why there was aggressive writing that was seen. But today, since we're going to be starting off lower, I said let's point out a couple of support levels. One is the 22,000 put. Well, that has a fair bit of open interest. And the premium on an average was close to around 120 rupees. So the first support comes in at around 21,880. If that breaks, you look staring down at the 20 DMA. The Nifty Bank, that's going to be the one that's going to come from a harder knock because the biggest constituent on the Nifty Bank is going to take a pullback. So the 20 DMA will breach that in the initial minutes of trade, but the bulls will want to fight back and maybe try to close closer to around that mark. If that breaks, then all eyes on the recent low that we saw. For starters, we start off in the red. Let's see who can put up their hand and fight for the bulls. But it's going to be a bit of a challenging day, given that it's Nifty Bank weekly expiry as well. Back to you.
Okay, let's see how that plays out. Like Nigel was mentioning, it's a 190-point cut that we're seeing on the GIFT Nifty for now. That is the trade setup as we see it this morning. We do need to bring you some important comments coming through from Davos as well. Shireen spoke with Geeta Gopinath, the first deputy MD of the IMF, who expects a soft landing in the United States. On her outlook for India, she said that the shift to production capabilities from China was really aiding India. And she also added that India needs to stay on the reforms path. Listen in to some excerpts from that conversation.
You said, I hope inflation is truly conquered in 2024. We have soft landings and more conflicts get resolved than get started. Of these three, which do you feel most confident of being realized in the year ahead?
I think we might see a soft landing. I have a little more optimism about that, which of course means that we would have also gone a long way in terms of bringing inflation down, right? So what we've seen in the past year is actually a quite resilient global economy, with some pockets of strong resilience, like the US. But China also did somewhat better than we expected in the second half, and several other emerging markets, including India, did better. But that came along with inflation coming down. So it meant that central banks could take their time to assess the situation, and we didn't see very dramatic further interest rate increases. So the odds of a soft landing have definitely improved.
Let's talk about India, Geeta, and you said that India has done better than what was expected and what was estimated by the IMF. What do you like about the India story today, and specifically from an FDI perspective? I mean, every global CEO that we speak to is bullish on India, but FDI is still lower than the historical averages, even in the last 3-4 years. So how do you see that playing out in the context of this supply chain diversification that is underway today?
So India continues to be among the fastest growing major economies in the world. We expect that to continue into 2024. So that's a very positive story. There are other reasons why investors are looking at India, because of the shift away from, say, locating production in China, moving more of that to other countries, including India. You're right, though, there is a disconnect between the number of projects that are being announced, foreign direct investment projects that are being announced going into India. You've seen a real sharp increase in that, as opposed to when you actually see the money that's coming in. The money that's coming in, you're not seeing that yet. Now, this, of course, can take time. The only thing India can continue to do is keep on the reform path. Building infrastructure is critical, and of course they've done really well on that front, both in terms of roads and ports and transportation and so on, but also in terms of the digital infrastructure. Both of those are winning strategies, and they should continue on that front. But many more reforms are required, including on labor markets, on land, even in the ease of doing business, addressing corruption. I mean, all of this, usually, if you want to see a sea change in a country's, how attractive a country is for investment, is you see reforms on multiple fronts. And as long as, India continues on that path, I think, yes, that's very promising.
All right, that is the word coming in from Geeta Gopinath. We'll keep bringing you lots of conversations all the way from Davos. But for now, we do need to get into a short break. On the other side, we're really going to get into HDFC Bank's numbers, break all of those down for you, and tell you where the miss really came through this time around. Stay tuned. Earnings that we're tracking this morning. HDFC Bank posted third quarter numbers after market hours yesterday. So Abhishek is here with the highlights. Abhishek, tell us, where did the big miss really come through this time?
Well, the focus will be on credit deposit ratio at 110% and liquidity coverage ratio at 110%. These are the two important numbers because they'll have to grow their business via deposits, and it looks tough in the near term as deposit garnering is coming at a huge cost, and that would also mean that, loan growth can get impacted if they slow down on the deposit growth. Slippages for the quarter were at 7,000 crore. Analysts were estimating anywhere between 6,300 to 6,500. 4,500 crore. Asset quality has improved as write-off continues to remain elevated, and recovery and upgrades were also strong at about 4,500 crore in this quarter. Core fee income is weak. It was largely flat on a sequential basis, despite the fact that loan growth was at 4.9% quarter-on-quarter. So treasury gains aided the top line growth. Treasury gains was more than 41% growth on a sequential basis. Provisions, they were elevated. Provisions increased on a sequential basis by more than 45%, given the fact that they made 1,200 odd crore provision for AIF related, that is alternate investment funds. A lower tax rate has aided the PAT this time around. Tax rate was at 15.7% when compared to 19.3% in the previous quarter. RBI's rule with respect to risk-weight assets has weighed on their performance. There is sharp capital consumption on a sequential basis, and RWA to advances ratio that's jumped to 97.6% when compared to 93.3% in the previous quarter. With reference to the PNL, NII was below our estimate, PAT was ahead of our estimates. Let's listen in to the management what they had to say in the con call.
Deposit is an important ingredient, that is the important constraint to grow. We would have liked retail to do 50% more, 80% more than where we did. But it is the wholesale, if you see, not just lack of growth, it's a degrowth in the non-retail on the deposit side. That is where it is very price sensitive. We chose not to participate in that price as much as possible. We have avoided that so that we can consume some liquidity that we have and at the same time make progress on the asset side. But that can't continue for long, as you know. LDR ratio is at 110 something. So we do need deposits to be kicking in for the loans to be operating. The other aspect that we said, borrowings, whether the borrowings can, how do you replace the borrowings with deposits? Yes, 8% of our fund, of our balance sheet was borrowings. Now it is 21% is borrowings. We do need to change that to deposit funding. But one other aspect that we have started to pursue even in this quarter is that the borrowings can continue as borrowing. So we got 7,500 crores of long-term affordable housing bonds that we have, infrastructure bonds that we issued in this quarter at the overall level. But that doesn't mean we do need CASA, but there are other opportunities on the borrowings too.
All right, that is the word from the HDFC Bank CEO. By the way, those are China's growth numbers, which is flashing on your screen. This is for the October to December quarter, by the way, and it has come in a little bit lower than what was expected at 5.2%. What was expected was 5.4% over there, and even sequentially, it is lower than what was estimated. We'll get into a short break on that note, but on the other side, we're tracking all of the cues from the commodity market. Stay tuned. We'll bring you that update on the other side. Welcome back. You're still tuned into Power Breakfast. We've been going through all of the equity market action, so let's talk about the commodity space as well. Manisha joins us now. Manisha, take us through the moves that we've seen overnight.
Thank you for that. You know, it is all about the Chinese data that are streaming in right now. You have the fourth quarter industrial capacity utilization at a 2-year highs, and that clearly seems to be supporting the metal prices. So whether it's copper, which did decline quite sharply in the previous week, was down by 2%, has seen some gains come back. So is the case with steel as well, where we are looking at some buying coming in right now. The GDP numbers are just coming in, and the industrial output is risen the most in 22 months. So China numbers for the month of December and the fourth quarter seem to be coming in better than expectations, and that is something that the metals can take cues from. In the meanwhile, when you look at the crude prices, there is some profit taking that we've seen onto this one. On one side, you have escalating tensions in the Middle East and high cost of shipping. There are delays in inventories and deliveries. But on the other side, there is still very uncertain global demand outlook. Everywhere that you see in major economies, the inventories are building up, and that is keeping the crude oil prices in check, is the reason we haven't been able to break above $80 a barrel on a very sustainable move when it comes to energy.
Okay, Manisha, thanks a lot for getting us all of that action. There's clearly a lot going on with the commodities as well, but we do have to wind down on that note on Power Breakfast. Thanks for tuning in. We have Bazaar Morning Call coming up after this short break.